That index dropped for the second straight month, Cindy. So what we're seeing, of course, is, I shouldn't say of course, but what we're seeing is higher energy prices are beginning to slow the economy down, and it's pulling down our leading economic indicator. So I'm concerned if gasoline prices, oil prices continue to grow, we're going to see some real issues in terms of the overall economy, and this may be the first indicator that we have that's what's going on.
Well, and one indicator that hit a record high, the prices paid index.
Absolutely. Our inflation gauge, which tracks the cost of raw materials and supplies that the supply managers purchase, reached its highest level since we began this survey in 1994. And that, of course, is not good news, at least certainly on the price front, inflation front. And we asked the supply managers this month to look out 6 months from now, and how much do you expect prices to grow? On average, of almost 10% growth, that's annualized growth, in the next 6 months. That's significantly higher than what we saw, say, in November when we asked the same question. We also asked the supply managers about how the vendors they purchase from, how they're doing, what they're doing about the higher fuel prices. 48%, almost half of the supply managers indicated that their vendors, the firms they're buying from, had added on transportation surcharges. Now that's a real significant, much higher number than I expected for the month. So there are some real troubling signs. Of course, this is coming from the global economic expansion. It's coming from the Fed's loose money policies, what I call the cheap dollar policies of the Fed, and certainly from higher oil prices.
What about employment? How does employment for the region look?
Employment, Cindy, is holding up pretty good, especially for firms that have ties, linkages to international markets, especially for firms that have linkages, ties to agriculture. And those two, that's where we're seeing some real good growth. For example, in Oklahoma, we're seeing some very good numbers because energy, oil, gasoline, fuel, natural gas, all that is important in Oklahoma. North Dakota, likewise, we're seeing some good growth there, and that comes from both agriculture and from energy in North Dakota. So all in all, we did see some growth. One of the real troubling areas is going to be food processing. Now that we haven't seen it yet, but food processing, their input costs are going up dramatically, and their ability to pass on these increased costs to their customers is going to have some impacts on whether they do well or do less well. And thus far, they've taken it in terms of profits. In other words, reduced profits. We're going to see potentially some pullbacks in employment in food processing. And that, of course, is important throughout the 9-state region, stretching from North Dakota and Minnesota in the north, all the way to Arkansas and Oklahoma in the south. Each of the states has important ties to food processing, and that's one of the areas we're probably going to, I'm expecting some less than robust survey results in the months ahead.
What about trade? I mean, how is that being affected by all this?
Well, with the cheap dollar policies of the Fed, we're seeing, and also the global expansion, we're seeing new export orders are strong, down a little bit, but still grow in the very strong growth range, and I expect that to continue. The problem is, of course, more on the domestic side. What we're seeing on the domestic side of the U.S. economy not doing as well. Of course, imports holding up strong, a lot to do with oil and energy prices up significantly. So that's having some, I would say, negative impacts on the economy as imports remain fairly high.
What are you seeing in the months ahead?
Well, confidence is down, Cindy. The business confidence index, when we asked the supply managers to look out 6 months, they're less positive today, much less positive today than they were 6 months ago. What we're seeing, of course, is the tragedy in Japan. Of course, that has some impact on confidence. We're also seeing higher energy prices, negative impacts on confidence. Those are spilling over, coming into our surveys results, and that's going to dampen economic activity. So what I'm expecting over the next quarter, 3 months to 6 months, is growth, but slower growth, and that's going to be across the region A little less so for North Dakota, and Oklahoma will be growing somewhat better because of their large energy sectors. Well, I think the other factor that came out was the inventories. Inventories the growth was a bit down, and again that reflects the supply managers, their expectations of sales in the coming 6 months, 3 to 6 months, and that again is not as strong as what we've seen up to this point, the last few months.